Hi there, my name is Patrick Kamau Kamure. Welcome to today's lesson of Public Finance and Taxation, where we look at the taxation of farming activities. So farming activity is somehow connected to the taxation of the business that in our previous lessons we have covered, because all matters is how is the farming activity carried out. Is it done by a limited company, a partnership, or a sole proprietorship? So when it comes to the taxation, determination of the taxable income, everything remains the same. So the only difference are just two things that you need to know. Additional taxable income in farming. Those are incomes that are specifically for farming, in addition to the one that we said are taxable under normal business, and also additional allowable expense. The one that we talked about are still applicable, and now they are those specific in farming because farming is a special activity. So I want to write something about the taxation of the farming activity here. Before then, at the end of it, we look at a question. This is what you need to know, that farming is also called agriculture. And it involves keeping of animals or growing of crops for food or commercial purpose. When farming is done for commercial purpose, then the income generated become a taxable income. Another point is farming is taxed depending on how it is carried out, either in partnership, by a limited company, or by a sole proprietor, where it is taxed in the same way as these businesses as already covered. However, the following apply specifically in farming. So we have number one, the following specifically apply in farming. We have additional taxable income. This includes all incomes generated in farming, i.e. income from selling of crops, livestock, farm produce, animal produce, etc. Before we continue, what we are saying is that, as I had introduced, that you do farming either for food, for commercial. If you do farming for commercial purpose, then the income you generate become taxable profit like any other business. Now, how do you tax the farming activity? It depends on how it is being carried out. Is it being done by in partnership? You tax it in the normal way, like a partnership, the way we have covered in our previous lesson. Determine the taxable income, then distribute the income to the partners, then tax them individually. Is it done by a limited company? It is a company, determine the taxable income of the company, then tax the company, just normally. Is it done by a sole proprietor, where you determine the taxable income of that sole proprietor, then tax him? However, we are saying the following specifically apply in farming: additional taxable income. Like that, any income that come out of farming activity, like selling of crops, livestock, animal produce. Animal produce are like eggs, milk, hide for the animals. All those are supposed to be taxable, and any other income that come out of farming activity. Then we have number 2, additional allowable expenses. Additional allowable expenses. This include, we have A, costs of purchasing seed, fertilizer, and livestock. B, we have farm operation expenses. Such as cost of water, electricity, transport, etc. Then we have C, costs of clearing land and planting permanent and semi-permanent crops. D, costs incurred to prevent soil erosion. I.e., construction of gabions, terraces, and making of windbreaks. The last one, capital allowance. Capital allowance on capital expenditure or farm work costs. This one, check capital allowance computation. So what we are saying is this: when you see these expenses and they are incurred in farming, treat them as a allowable expense. One we are saying is the cost of purchasing seeds, fertilizer, and livestock in farming. They are allowable. Treat them as allowable expense. Farm operational expense, just like any other business, water expense, electricity, transport, and any other expense incurred in farming, allowable. Cost of clearing land and planting permanent and semi-permanent crops. Permanent crops are the crops that can be in the farm in the long term, like coffee plants, tea plants. The cost of planting them are allowable. Semi-permanent are like pyrethrum. They're usually in the short run, but 2, 3, 4, 5 years. They are all allowable. Cost incurred to prevent soil erosion, like construction of gabions, terraces, making of the windbreaks. All these are allowable as long as they are to prevent soil erosion. And capital allowance on capital expenditure in farming. Capital expenditure in farming is also called farm work cost. So when you see farm work cost, claim capital allowance under farming. And this I'm reminding you to go and check the capital allowance computation because we learned about it. Now at this moment, I'd like us to look at a question to see what we are talking about. So I read the question. This is what the question says. Mazao Ranch Limited practices mixed farming and milk processing. The following is the company's statement of profit or loss for the year ending that 1st December 2020. We have the revenues consisting of sale of milk, sale of livestock, sale of manure, proceed from the sale of an old tractor, discount received, expenses which we have general expenses, construction of water tank, vaccine for livestock, loan repayment, depreciation, electricity and water, conveyance fee, construction of chicken sheds, animal feeds, salaries and wages, bad debts provision, repair and maintenance, professional fee, net profit. Additional information number 1, farm work acquired on 1st July 2020 comprised of the following: granary, labor quarters, cow sheds. Number 2, general expenses include subscription to a farmers association, acquisition of a 50-year lease, staff Christmas party, parking fine. Then number 3, repair and maintenance comprised, provision for fencing expenditure, repair to machinery, other repairs. Number 4, professional fee include 500,000 paid with regard to pursuing a dispute with the Kenya Revenue Authority, VAT department. Then assume corporate tax rate during the year was 25%. Required, adjusted taxable profit or loss for Mazao Ranch Limited for the year ending that 1st December 2020 and the tax payable if there is any. So in this case, we take note. Yes, it's a farming activity, although they are mixing it with processing, but the key thing is farming activity. And then the farming is done by a limited company. So whatever we have been saying about a limited company apply with addition of this additional taxable income we have talked about and additional allowable expense. So we treat it as a normal, it's a company actually. So the next question should be, which method are we supposed to use to get the taxable income? Like any other business, for this one we use the net profit method because we have been given the net accounting profit after the income statement. So this is how we go about it. For the year ended that 1st of December 2020. So we start with net profit provided, which we have 157,000. Then when you are using the net profit method, we said you add non-allowable expenses in P&L and taxable operating income not in P&L. So just like we have been using the net profit method, we'll go through the P&L, look for the expenses that are not allowable in the P&L first. So which expenses are in the P&L? General expense. General expense we have been saying is allowable is for the business. Construction of water tank. We don't allow water tank, that's a fixed asset. So construction of water tank, a fixed asset we don't allow. Of which case we have 240. Had been deducted, isn't allowable. Next, vaccine for the livestock. That is allowable expense, vaccine, because it's a farm operational expense. Loan repayment. We said loan repayment is not allowed. What we allow is the interest on loan, not the loan. So we disallow that. Loan repayment 350,000. After that, depreciation. Depreciation isn't allowable, so we add it. Depreciation, which you have 180,000. Electricity and water, that is allowable expense. Conveyance fee, no. If you go to the legal expense, we say conveyance fee is not allowable. And which we have 156,000. Then construction of chicken sheds, that's also a fixed asset, you know, a structure. We disallow. Chicken sheds, a fixed asset for 80,000. Animal feeds, that is an allowable expense. We said an operational expense. Salaries and wages is allowable. Bad debt provision. Provision we don't allow unless they are specific provision. So we disallow that. Bad debt provision, which we have 150,000. 150,000. Repair and maintenance, that is allowable, and also professional fee are allowed. From there, we go to the additional information we look for, an income not in P&L. If an income is not in the P&L, can only be in the additional information. And if it happens to be taxable operating, we add. And at the same time we go there, we look if there is an analysis of the expense in P&L. In the analysis, if they do happen to be non-allowable, we add still. We start with the additional information, number 1. Farm work acquired on 1st July 2020 complies of the following. Now, farm work, that's a fixed asset. We said here, it's a capital expenditure. We don't allow capital expenditure. We claim capital allowance. But those expenses, if you look at them keenly, they are not in the P&L, so we cannot touch them. Then number 2, general expense include. Now, general expense is one of the expenses in the P&L, so we look for the non-allowable expense in it because it's an expense in the P&L. Subscription to Farmers Association, that's a trade association which we allow. Acquisition of a 50-year lease, that's allowable. We said up to 100 years, up to 99-year lease is allowed. Staff Christmas party allowed for welfare. Parking fine, we don't allow fine. So in this case, we disallow. Which we have 129,000. Then after that, we go to number 3. Repair and maintenance complies. Now, repair and maintenance is in the P&L. So we look for the non-allowable in it. Provision for fencing expenditure. We don't allow provisions. So we add provision. Only specific provision for bad debt do we allow. This provision for fencing, it's not specific provision for bad debt. For fencing, which we have 145,000. The other one is repair to machinery, that is allowed, together with other repairs. They are all allowable, revenue expenditure. Then we go to number 4, professional fee include. Now, professional fee is in the P&L. If you go to the P&L, the last expense is actually the last one, is in the P&L. We look for non-allowable in it. It includes 500,000 paid with regard to the pursuing dispute with Revenue Authority VAT. We said any expense relating to tax we don't allow. So we'll have a professional fee for VAT. $500,000. We don't allow. Number 5, assume the corporate tax rate during the year was 25%. That's not an income, it's not an expense. So we are done with an allowable expense in P&L, an income not in P&L. Unfortunately, we didn't come across any. Now we now come to the deduction. Remember, we deduct 3 items: non-taxable operating income in P&L or investment income in P&L and allowable expenses. Allowable expenses. not in P&L. So first thing, we go to the P&L. We look for non-taxable operating income there. And also the same P&L, we look for all investment income there. Let's see. In the P&L, these are the incomes. Sale of milk. We said sale of milk is a taxable income. Taxable operating in farming. Income from selling of an animal produce. We said here under taxable operating income. Sale of livestock are taxable operating for farming. Sale of a manure, that's an animal produce, a taxable income. Proceed from the sale of an old tractor. Under normal circumstances, we don't tax income from selling fixed asset. That's a fixed asset. So profit on sale of tractor, which we have an amount of 820,000. We remove, not taxable. The other one is discount received. Discount received is a taxable operating under normal business. That's what we said. So since we are done, there is no other income in P&L that we have not considered. We now look for allowable expense not in P&L. An expense that is allowable that isn't in the P&L. If it is not in the P&L, then it can only be in the additional information. Let's see. Number one, farm work acquired on 1st July 2020 comprised of the following. Now, farm work that is not in the P&L. And it's also not allowed. We said, what do? We claim capital allowance on farm work. Which one? If you go to the capital allowance we discussed earlier on in the previous lessons, so we said granary, that should be 50% without considering time. Even if it was from 1st July, we don't consider time. Labor quotas in farming, remember in farming, is supposed to be 50%. Now, cow shed, that's supposed to be another 50% without considering time. So we claim them. So we are continuing here. On that, we are looking for allowable expense not in P&L. So we have capital allowance. Capital allowance on. We start with granary, which should be 50% of 420. That will be 210,000. Labor quotas, 50% of 1,200. That will be 600,000. Then cow shed, 50% of 160. That will be 80,000. So we are done with number one. We continue looking for allowable expense not in P&L. Number two, general expense is in the P&L, including whatever is in there. Substitution, all of them are in the general expense. Repair and maintenance is in the P&L, including whatever is in there. Professional fee is in the P&L. 5 is not an expense. Now that we have not been given capital allowance, and that's the reason why we are computing, you have to come back here and now look for fixed assets so that now you can finish on the capital allowance. We had construction of water tank. That is a structure construction. So that's supposed to be 50%. It is a structure in farming. The other one is construction of chicken sheds. That's another 50%, a structure in farming. And this fencing, if it was not a provision, provision means that they have not yet incurred. They are providing they are going to incur. We don't claim capital allowance. But if it was incurred, we could have claimed 50%. And there isn't any other fixed asset. So you'll come here, a water tank construction of, we have tank, which is supposed to be 50% of 240. That will be 120,000. The other one is chicken shed, construction of chicken shed, which should be another 50%. Chicken shed we had for 80. That will be 240. And since there is no other fixed asset and we are done with the allowable expense not in P&L, we get the net taxable operating incomes. So we are going to take this, add, and then minus. So we start 157,000 and then we add to 40,000, we add 350,000, we add 180, we add 156, we add 480, we add 150, we add 129, we add 145, we add 500, and then we minus the 8, it was 820, we minus 210, we minus 600, we minus 80, we minus 120, and we minus 240, which we have 417. So this is 417,000. Now note, this was a company, limited. So we said company, since it is taxed on its own income, we add the taxable investment income. Investment incomes. But if you look at the question, in the income statement, these were the income. Sale of milk, sale of livestock, manure, proceeds from old tractor, discount. There is no investment income. So this would be a dash, meaning the total taxable income would be the 417,000. So that mark the end of required one. Adjusted taxable profit or loss of Mazao Ranch Limited for that year. Number 2, tax payable or on profit or loss. So in this case, we say this is a company. We said like any other company, corporation tax rate. That we have not been told is an unresident or a foreign company, 30%. So we'll say tax would be 30% of 417,000, which will give us how much? 30% of 417. That gives us 125, 100. And that is the end of that question. So that is how you tax the farming activity. And you would have noted that it's not different from the businesses that we have looked at. You just consider it like a normal business. Sole proprietorship if it's done by a sole proprietor. A partnership is if it's done under partnership. A limited company like the way we have done it there, then you just tax it that way. The only additional thing that you need to know is this additional taxable income and additional allowable expense. So that marks the end of the taxation of the farming activities. And I want you, below this video, there is an assignment. Kindly go through it, look at it, attempt it, then see if you can be able to do it the way we have done ours here. So for today, we end there. Thank you very much.